Okay, so before we can get into some detail about budgeting, we need to introduce a concept which is called the operating cycle. And the operating cycle of business, basically, it has to do with how long it takes you to sell your products and get the cash from selling your products. Okay, so service businesses and retail businesses and manufacturing businesses have different types of operating cycle, but this becomes the basis of budgeting. Budgeting is done in relation to operating cycles of a business. And so for a retail business, it's the amount of time that it takes for a company to buy inventory, to sell the goods, and to collect the cash. Right? So from the time that you buy what you're going to sell, so if you are a coffee shop, from the time that you buy your coffee beans through the time that it takes you to get cash back from your customers who have purchased them from you, that is an operating cycle for a coffee shop. Now, not all businesses do all their sales in cash, right? And as a matter of fact, you're going to need to make a business plan in the next week or so that involves some credit sales. So depending on how long it takes your customers to pay you, your operating cycle can be a month, 2 months, 3 months, more. Okay, so that's what an operating cycle is for a retail business. And here is a little graphic showing what the cash flow in an operating cycle for a retail business. So working from the top down, right, we're interested in where is our cash coming from. Cash comes in by collecting accounts receivable from customers. It also comes in through cash sales. Now cash flows out for payments, for actual cash payments to our suppliers for what it is that we're purchasing from them, or credit purchases from our suppliers that we eventually pay via accounts payable. Right? So this is the operating cycle for a retail business shown in graphic form. And then a service business, an operating cycle is also defined in terms of how long it takes for a service business to acquire its supplies and the services. So for instance, if you are a personal training studio and you have to pay employees, right? So that's part of your operating cycle is how long it takes you to pay your employees or your subcontractors, and then how long it takes to get paid from the services that you've sold to customers, right? So here is, again, a graphic of the operating cycle of a service business, and really the cash comes from, this is an express transfer company, so this is a delivery service like a DoorDash, right? And so they acquire cash, or they collect cash through either collecting on their accounts receivable or through just delivering for cash. Sometimes they deliver on credit that creates cash receivable, right? So that's what the operating cycle would look like for a just a DoorDash or a delivery service type business. Now, I'm going to pause the video right here and open it back up again with my trusty Excel spreadsheet next to it to make it a little bit more clear for you. Okay, here we go. So I've opened up Excel over here, and this is the budget that you guys will be working through for your homework for next week. Or over the next week, I guess I should say. But I wanted to show you what these concepts over here in the PowerPoint actually look like when we're looking at them in Excel, right? So the first thing I should note is that when we're talking about a budget for a business, it's not just a one-page thing, right? It's a number of reports or budgets showing different goals to be met by different aspects of the business. And so over here, if you look at the spreadsheet, you see that this is actually a multi-page spreadsheet, right? So there's a whole bunch of different reports that we're going to be working in to come up with the budget for your startup business, cookies on campus, or whatever you want to call it. So the budget is a set of interrelated reports showing what your goals are, what you need to do to meet those goals, what are the activities that you're going to be doing, and what resources you need, and then that shows your actual financial results. So over here, one of the last 2 pages that we have in our budget spreadsheet that you're going to be working on are actually a budgeted pro forma. It's called a forward-looking income statement and a forward-looking cash budget. The cash budget is very, very important. You can't run out of cash. If you run out of cash, you're out of business, right? So this is where we're heading with this material, and I'm going to kind of, like I said, walk through the slides with the spreadsheet open to illustrate what I'm talking about while I'm talking through the slides. Okay, so in our budget, in a retail business, think about what the operating cycle or activities are for a retail business. You sell your goods and service, or you sell your goods, and then you buy what you need to sell. It costs you money, right? You have expenses associated with selling things, whether that's advertising, or whether it's, the actual cost of paying salespeople, or commissions, things like that. You also have overhead, general administrative expenses, and then as part of your master budget, you would have a projected cash flow or a cash budget that tells you whether you need short-term borrowings, perhaps, and then you'd have a forward-looking, a pro forma income statement. Okay. Service businesses budgets don't include a purchase budget because you're not buying anything, right? And they're usually pretty simple, right? They combine the expense budgets, then so it's not just selling expenses. You'd have selling and general administrative together. Service businesses are often more simple than a retail business. And then a manufacturer's budget, though, that is more complicated. Manufacturer's budget includes many, many pages, including direct materials and labor and the cost of goods sold. So a manufacturer master budget is a much bigger deal than a retail or a service business's master budget. So here is sort of a flow chart that shows how the various portions of a master budget flow together, right? So you start with your sales. Everything starts with a sales budget. That will tell you then how much you need to purchase. It'll tell you what your selling expenses are going to be. And then, your sales budget sometimes doesn't really directly have to do with your general administrative budget. Those all then move and flow into your cash budget, which is your projected cash flow statement, your projected income statement, and balance sheet. And we're not going to do a projected balance sheet in this class. And you can see over here, right, we have a sales budget, we have a purchases budget, we have a selling expenses budget, we have a general administrative budget in our spreadsheet, and then we have a cash budget and a pro forma income statement. So all of these sheets in the integrated spreadsheet that you have are all what we're talking about over here in the slide. Okay.